What if I told you that one of the world's largest banks might be sitting on a silver time bomb that could explode in just weeks? A leaked document has revealed something extraordinary happening in the precious metals market, and the deadline is January. This isn't just another banking story. This could reshape how we understand the entire silver market. Here's what we know. According to leaked lease contract documents, JPMorgan Chase allegedly borrowed a massive quantity of physical silver from the Industrial and Commercial Bank of China, known as ICBC, under a 3-month lease agreement. The clock is now ticking, and JPMorgan has until January to return that silver. But here is the hook that should grab your attention. If they come and deliver the physical metal, they may have to publicly admit default. Let that sink in for a moment. We're talking about JPMorgan, a financial giant, potentially unable to return borrowed silver. Now, why does this matter to you? Silver isn't just some shiny metal collector's hoard. It's critical for solar panels, electronics, electric vehicles, and countless industrial applications. The global economy runs on silver. When major banks lease silver, they're essentially borrowing physical metal with a promise to return it later, often to profit from price movements or to meet delivery obligations. But what happens when the physical simply isn't available to return? That's the question hanging over this situation right now. The leaked contract suggests that this wasn't a small transaction. We're talking about industrial-scale quantities of silver that ICBC, China's largest bank, entrusted to JPMorgan. The 3-month term is significant because it is short enough that JPMorgan can't simply wait for new mining supply or hope. The problem resolves itself. They need to source this metal now, and if the reports are accurate, January is their deadline. Let's put this in perspective. The silver market has been showing signs of extreme tightness for months. Premiums on physical silver have been elevated. Delivery delays have become common. Some analysts have been warning that the paper silver market, where contracts are traded, has become disconnected from the physical reality of available metal. If JPMorgan actually struggles to return this leased silver, it would confirm what silver investors have suspected for years. There's far less physical silver available than the paper markets suggest. But here's where this gets even more interesting. Why would this contract leak now? Leaked financial documents don't just appear by accident. Someone wanted this information public, which raises questions about the power dynamics between these massive financial institutions. Is ICBC applying pressure? Are there other players in the precious metals market who benefit from exposing potential weakness in JPMorgan's position? The geopolitical implications are fascinating when you consider this involves America's largest bank and China's largest bank in a potential standoff over physical resources. Now, let's consider the broader economic context. Central banks worldwide have been accumulating gold and silver. Countries are increasingly worried about dollar dominance and are seeking hard asset alternatives. China has been particularly aggressive in building its precious metals reserves. If ICBC publicly called out JPMorgan for failing to return leased silver, it wouldn't just be a commercial dispute. It would be a symbolic moment, showing that Western financial institutions may not have the physical resources they claim to control. What would default actually mean? In the financial world, failure to deliver on a physical commodity contract is serious. It undermines trust in the entire leasing system. It could trigger a cascade of demands from other institutions that have loaned precious metals, wanting their physical assets back before others. We could see a run on physical silver similar to a bank run, where everyone rushes to claim their metal simultaneously, exposing that there isn't enough to go around. For everyday investors and consumers, this matters in several ways. First, if this situation escalates, silver prices could spike dramatically as institutions scramble to acquire physical metal. We could see premiums on coins and bars surge even higher than they already are. Second, industries dependent on silver could face supply disruptions and cost increases, potentially affecting everything from solar panel prices to electronics manufacturing. Third, this could be a canary in the coal mine for other commodity markets where paper trading has eclipsed physical reality. The skeptics will say this is just another conspiracy theory in the precious metals community, which has long claimed that prices are manipulated and physical supplies are scarcer than reported. They'll argue that JPMorgan, with its vast resources and market connections, will simply source the silver elsewhere and fulfill the contract quietly, as these situations are typically handled. And they may be right. Major banks have navigated commodity delivery issues before, and this could end up being resolved without public drama. But even the skeptical view should concern us. If resolving this requires JPMorgan to aggressively buy physical silver from the market, we'll see price impacts regardless. If they tap emergency supplies or call in favors from other institutions, it demonstrates market fragility. And if the leak itself was strategic, it suggests that the relationships between these financial giants are under strain in ways that could have broader implications for international finance and commodity markets. So what's the bottom line as we approach January? Keep your eyes on silver prices and watch for any unusual activity in the precious metals markets. Whether JPMorgan quietly fulfills this obligation or we see public acknowledgement of difficulties, this leaked contract has pulled back the curtain on how the silver market really operates. The question isn't just whether JPMorgan can deliver the silver. The question is what this situation reveals about the gap between paper promises and physical reality in our financial system. This is a story that could be a footnote or the beginning of something much larger. Either way, the deadline is approaching and the silver market is watching. Stay informed, stay skeptical, and remember that in economics, what happens in the shadows often matters more than what's on the official balance sheet. Thank you.